the markets climbed a wall of worry again about something, and this was, of course, the tariff story. For some time, markets worried about tariffs and the impact on sentiment, particularly corporate sentiment, but there doesn't seem to have been meaningful impact. Look today at U.S. jobless claims reaching a 48-year low, or last week, small business owners reaching the highest level of positive sentiment in 45 years of surveying. And also, they said the amount of people that they intend to hire is the most ever. So market sentiment has changed with respect to the tariff story, and it should have in the first place, because tariffs amount to only about 0.4% of world GDP, minuscule in the larger scheme of things, and so markets have been able to shrug it off because, in the end, the U.S. economy, particularly, is service-oriented.
Even with the new round of $200 billion of Chinese imports, you see it as a minimal impact?
It's a 0.4% impact, and U.S. GDP is running in the high twos. Growth potential, how fast it can go without generating inflation, somewhere in the high ones. So it's okay to the investor that the economy might take a small hit, call it a tenth or two from tariffs, because it could actually help prolong the expansion. But the bottom line point is growth is still strong relative to potential. Global GDP is still looking good, and not much in the way to stop it.
You know, I've heard two arguments, Sameer, when it comes to why the market has shrugged off the trade skirmish or war, whatever you want to call it. One is Tony's, that this is just a small amount of our GDP, and it's growing quite nicely anyway, so it doesn't matter. The other argument I'm increasingly hearing, and I'm wondering your take on this, is that the market is backing up the president's trade strategy and is looking ahead to winning some of these trade fights and making an overall better economic environment and better trading environment for U.S. companies.
Yeah, I mean, we think investors are just kind of doing their homework, and what they're looking at is with trade and tariffs, they will have an impact. They'll have an impact on certain industries, certain companies, but when you step back and look at things from a macro standpoint, the economy's doing really well. You've got fiscal spending, you've still got tax cuts making their way through the system. You've still got, companies, doing a really good job of maintaining margins, right? Wages haven't really crept up. So, again, when you kind of think about how to allocate your assets and you're looking at stocks versus bonds versus cash, it's still a pretty attractive environment to be in stocks.